In 2019, a Chinese coffee company did something Starbucks took 50 years to do. It went from 0 to more stores than Starbucks in China in under 2 years. Investors called it the fastest-growing coffee company in history. There was just one problem. Roughly $310 million of its sales, almost half its revenue, did not exist. They were invented, fabricated in a spreadsheet, sold to fake customers, paid for with the company's own money moving in a circle. This is the story of the greatest coffee fraud ever told. This is case file number 3. Meet Luckin Coffee. Founded in 2017 with one obsession: dethrone Starbucks in China. Starbucks had spent 20 years building a premium coffee culture there. Comfortable stores, high prices, a place to sit. Luckin did the opposite. Tiny pickup kiosks, no seating, order only through an app, and prices Starbucks couldn't touch thanks to a flood of discount coupons. Buy one, get one free, 50% off, your first cup basically free. The strategy worked at terrifying speed. Luckin opened stores at a pace nobody had ever seen. Thousands of them, in months. To customers, it looked like a tech-powered revolution. To investors, it looked like the next big thing. And Wall Street wanted in. In May 2019, less than 2 years after opening its first store, Luckin did the unthinkable. It listed on the NASDAQ in New York. The IPO raised over $560 million. Prominent American funds piled in. The stock soared. On paper, Luckin was a rocket ship. Explosive store growth, explosive user growth, explosive revenue. The numbers were almost too good. And that's exactly the problem. Because behind those beautiful numbers, a small group of people at the top had already started doing something that would make this one of the most infamous frauds in modern finance. Here's how the machine worked. Luckin's whole business ran on coupons bought through its app, so the fraud hid exactly where the real business lived. Starting around April 2019, employees and people connected to the company began buying Luckin coupons. Not to drink coffee, but to fake sales. They set up shell companies, fake corporate customers, many of them secretly tied to Luckin's own chairman and staff. These shells bought tens of millions of dollars of coupons that no real customer would ever redeem. The money often came from Luckin, moved through the shells, and came back as revenue. A loop. The company was, in effect, buying its own coffee and calling it growth. Now, you'd think faking sales is enough. But here's the detail that reveals how deliberate this was. If you only inflate revenue, your profit margins look impossibly good, and auditors get suspicious. So Luckin also inflated its expenses by more than $190 million. Fake costs to match the fake sales. They built an entire fake operations database, altered bank records, created a fictional version of the company that looked, on every spreadsheet, completely real. By the third quarter of 2019, Luckin was overstating its revenue by 45%. Nearly half of what it told the world it earned was a lie. And during all of this, the company raised over $800 million more from investors who believed the story. Every fraud has a moment where the ground shifts. For Luckin, it came in late January 2020. An anonymous report started circulating. 89 pages, packed with detail. It claimed Luckin was systematically faking its numbers. Thousands of hours of store surveillance, receipts, counts of how many cups actually moved across the counter versus how many the company claimed. A famous short seller, Muddy Waters, promoted the report. Luckin denied everything, called it misleading. The stock held. For a couple of months, the lie survived. And then the company's own auditors started pulling the thread. On April 2nd, 2020, Luckin dropped a bombshell on its own investors. An internal investigation had found that around $310 million in sales simply did not exist. The chief operating officer and others had fabricated them. The market reaction was instant and brutal. In a single day, Luckin's stock collapsed from over $26 to around $6. A 75% wipeout in one trading session. Days later, it emerged that an entity controlled by Luckin's chairman had defaulted on a $518 million loan backed by Luckin shares. The rocket ship wasn't landing, it was disintegrating. The consequences came fast. In June 2020, the NASDAQ delisted Luckin, the premium American listing. Gone. The CEO and COO were fired. In December 2020, Luckin agreed to pay the US SEC a $180 million penalty for defrauding investors. To most people watching, this was the ending. Another Chinese growth story exposed as a mirage. A company caught faking half its revenue, kicked off the American market, fined into oblivion. Case closed. The fraud killed the company, right? Except, that's not what happened. Here's the twist almost nobody expects. Luckin didn't die. It filed for bankruptcy protection, restructured its debt, replaced the leadership that ran the fraud, and cleaned house. Then it did something extraordinary. It kept opening stores. It fixed the actual business underneath the lie. Because the demand, unlike the fake coupons, was real. People genuinely liked cheap, fast, app-based coffee. By the mid-2020s, Luckin had more stores in China than Starbucks. The company that faked its way onto Wall Street got caught and was left for dead. Became the biggest coffee chain in the country. So, time for the verdict. Case file number 3. The verdict. Luckin Coffee is a paradox. The fraud was real, deliberate, and enormous. Hundreds of millions in invented sales, a fake database, altered records, all to feed a stock price. But here's the uncomfortable truth the story forces on us. The fraud and the business were two different things. The lie was the growth rate. The demand was real. Luckin's leaders didn't fake a company nobody wanted. They faked the speed of a company people actually did want. Because fast enough to justify the stock price and real were two different numbers, and they chose to lie about the gap. The lesson, written in the file. Fraud isn't usually a bad company pretending to be good. It's often a good enough company pretending to be great. Buying its own product in the dark to close the distance between what it is and what the market demands it be. The most dangerous lies aren't built on nothing. They're built on something almost true. Case file number 3, closed. If you want to keep watching the money machine break down, the last 2 case files are waiting for you right now. You know what to do.